Welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunity. My name is Ryan.
My name is Lucas. And we have a little update, a follow-up. We really just want to, this is education. We'll share a little bit of news. And with that, there are opportunities. That's why we do this. None of this is financial advice. We're not into trading and telling people to leverage themselves up and find ways to maximize, because we're just learning this new technology and sharing our research. It's an emerging technology, so much growth, so much is changing, but it's important sometimes to step back and take a look at the market as a whole, take that macro look and kind of see where do we come to from here? Where are we at? Where are we going? And we've come a long way. I mean, when we first got started back in around 2017 and learning about it, getting involved and sharing and teaching about it, we had been aware for several years, but even then, there was no talk among national governments for Bitcoin being a legal tender. It was not spoken of in financial traditional markets or among politicians as being a legitimate technology. In fact, it was scoffed at, and the media was used to deride it and make it look bad. And now there's talk about large financial institutions adopting, supporting national governments, financial intermediaries. Just we're in a whole nother world. And so why are we bringing this video? Well, you know, early on, there's an idea, a philosophy that crypto and blockchain is this technology that's decentralized in grassroots, and in many ways it is. But where we're at today in the world of DeFi, blockchain crypto, we often see a lot of correlation between what's going on in blockchain and crypto and in the traditional markets. And I think that there's a lot to be understood in the growth of blockchain and crypto and in this correlation. And the main point of this story in this video is that it's important to be aware that where we're at in blockchain and crypto now, that it is a game that's being played by very, very big players, by big money. It is not some alternative grassroots market that is going up against Goliath. It's actually a new technology that Goliath is already using. A lot of the AMMs and the DEXs and the DeFi protocols are being propped up by the Citadels and the BlackRocks and other VCs and institutional money that you don't hear news articles about. We just did a video on the Luna UST, the Luna Terra depegging attack. And one thing that can be learned from that is that there are people with access to a lot of money and a lot of resources and the knowledge to take advantage of disparities in the market. So
in liquidity and you know, certain tokenomics that, you know, maybe not hold in a real extreme situation, right? With bear markets, you know, and prices falling, how things can unwind quickly. Yeah, I mean, what you're speaking about makes me think about what we this term, the everything bubble, and I know it kind of describes the period we just got out of, right? The period maybe roughly from the end of the housing bubble to now. And it was massive amounts of credit creation. QE, 2 different QE programs had occurred. You know, we're talking about the Fed balance sheet growing to many trillions of dollars, and just all this money sloshing around the economy. We're seeing the effects of it now with inflation, you know, becoming a problem. Housing and rental costs are soaring. You know, the stock market has had a massive run. It's selling off now as everything is, but there's been this period where, I remember the reason I say everything bubble is because what was happening in this time was that interest rates were pushed down to almost zero. And so the return from safe investments like CDs and things like that was reduced to nothing. And so what people had to do, institutions, individuals, everybody in between, they went out looking for yield. And they did that by taking on risk. And it got so bad that even the yields on corporate debt and junk bonds, the bonds of companies that maybe aren't the safest, you know, bet, those were even had been bit, even those assets had been bent up and their interest rates were super low. So there was all this money sloshing around. And so this became known as the everything bubble. And my point is that the money that had already bid up assets in the traditional markets, that's the smart money, realized that, well, we're not going to get the same return, in these legacy assets that we've enjoyed over the last, 3, 4, 5, 10 years. So let's look for other things. And what's the new story? Crypto. And, so Michael Saylor and various JP Morgan changed their tune. Goldman Sachs opened up a pathway to get and their investors to have purchases. There was the crypto ETF, the Bitcoin ETF we talked about. There was Bitcoin futures that were happening. So what had happened was Wall Street completely changed their tune and realized that this new space was a place for them to make money. And like everything, to your point, like everything that happens at that level, the same tools, same techniques, same, kind of the same games that you see happening in Wall Street just got ported over to crypto. The difference is that in crypto, the liquidity was much thinner. So the ability to move markets was greater for these players. And also the relative experience and education of the people involved was much lower, right? In Wall Street and in traditional assets, the majority of players are a little bit more seasoned, but crypto is a brand new thing. So a lot of the people participating didn't have a financial background to draw from. So they were easy marks, right? To use that term. And I feel like
the lack of regulation in this field. Now, this is not a pro regulation argument. It's just a fact that these financial intermediaries they're not allowed to advertise or use propaganda in certain ways to promote investments, where in the world of blockchain and crypto, they can people
dump and dump.
They can use Twitter, YouTube, they can do whatever they want to affect prices and pump and dump. So there's a lot more freedom to use tactics to maximize what you can earn in the growth of this new technology, which it is what it is. It's fine. I mean, it doesn't affect, Bitcoin, and when the technology could stand on its own, it just continues to move forward regardless. But
it does suggest, though, that the last couple of years have been driven by institutional money. And if we're entering into a season of credit restriction and higher interest rates and a risk off sort of footing, then it would follow that crypto would be kind of like a tech stock, right? The first things to get sold off.
Right.
So what the takeaway
it's already started happening. And we saw even with the internet bubble in the 90s, I mean, 2000, you saw it deflated substantially for quite some time. It wasn't just some quick a few months down and we're back up to new all-time highs. I mean, so what we're saying is that this deflation, this bear market can be quite drastic and quite substantial.
Right. Let's take a look at Bitcoin and get an idea of where we're at. I mean, year to date, it's down around 36%, which is not bad considering there are some cryptos right now that have been down 36% in the last day or two.
Hour.
We're 99% if we're talking about Luna, right? So yeah, relatively not as bad as the overall market. But if you take a look at the chart, I mean, you get an idea that we just popped through, we hit a lower low, which broke through support that had been established from the last time we had a correction, which was back in May of 21. Oddly enough, it's roughly a year later, and we're also correcting again. But we broke through those lows that it's established a floor back in 21. So that that's usually a takeaway from that is that lower lows are probably coming, right? Once you pop key levels of support, the floor kind of evaporates, and where that goes is anyone's guess. But I know but we aren't technical analysis. This is not a technical analysis channel. We're not trying to do any in-depth analysis here, but just to say that if it drops down to 20, that wouldn't be a shock, right?
No, from just a macro perspective, just looking out in the long run, this, like you said, it's not TA of any sort, but I'm thinking low 20s. I'm thinking a pullback somewhere into the low 20s, and we'll just kind of crab walk as we move down for quite some time. It could stay there for a little while.
Right.
And before a slow return when the bulls come back, it could even get into the high teens. I don't think it would go much with all the printing and all the institutional support, what's going on.
But we could see, like you say, a prolonged period of sideways action, right? Where we don't really move much further down, but there are moments,
year.
You know, it could be a year like that. You know what I think will be the real trigger for the next move up, and I'm sure you'll agree. It's when we have the next QE program announced. You know, when we go back to easing, and the money printing is restarted. I really feel like that will be the moment where you'll see this kind of parabolic growth.
I also think I agree, and I think because nothing happens ceteris paribus, there's always other things changing, and it's dynamic, as you know. And there's every year we've gotten closer to more regulation. What are the in traditional financial markets, the legal powers going to make rules that affect the flow of the growth of these markets? And I think there's going to be a lot of regulation that brings clarity. To, although it may end a lot of opportunities, it will allow for massive, more open growth
adoption, right?
on another level. So we could see that coupling with lower rates, and yeah, absolutely. But that being said, understand that crypto, the market in general, is very much already infiltrated by smart money and large money, and the games that you can be used to, that you've seen in traditional markets, be sure that they're going to exist, and you'll see them here. I do want to end. You have Hex that popped up there, number 7, the market cap. We're going to go into another video in depth here on this token for many reasons, and the developments that are going on with Pulse Chain in that community. But having learned so much from the founder, Richard Hart, and seeing the success that's been enjoyed with this crypto, it's been the best performing crypto in the last couple of years. And it is, in many ways, outside of Bitcoin, the truest version of cryptocurrency in many ways. And I say that because it is decentralized, immutable, and secure by code as a smart contract built on a blockchain. It is not a layer 1 blockchain itself. So its security is not contingent upon miners or stakers. And it has a very innovative, we've done a video on the time value mechanism of inflation, which is a very, very beautiful. I think that's one of the best purposes, I think, of having a cryptocurrency built in the blockchain, what it allows to be done. My point of mentioning this is not a big Hex commercial. We'll do that on another video. The idea is this: if you look at the 2-year history of Hex, it's still very early in its growth. It has not yet been infiltrated by institutional. In many ways, it's the anti-institutional blockchain in crypto, because at this point, even Bitcoin is heavily influenced by institutional money. And it also has the minor centralization issues, not necessarily centralization, but it does
has that capacity for sure.
It has that capacity, and it's a barrier to entry when it comes to people having access to inflation of a new currency.
Whereas with Hex, the distribution of new Hex is very egalitarian. It's distributed across the stakers, right?
Anyone who just chooses to forego a time, and it rewards delayed gratification, which is natural in time value of money. It takes advantage. It capitalizes on a natural phenomena, which we talk about in the study of interest rates and prices. But the natural phenomena is that $1 today is worth more than $1 tomorrow. So therefore, there must be a way of rewarding that delayed gratification. That is the simple and beautiful mechanism behind the inflation, instead of rewarding large staking pools or rewarding who has access to computer hardware and cheap electricity. So yeah, there are some neat innovations there. It is not yet taken over and it's still early. So it's very exciting to see what's going on. Even now, when you look at the flows of DeFi, this is why I mentioned this, because it's very exciting. If you follow the market caps, very often you'll see a whole bunch of EVM chains, Avalanche, Polygon, all of these things just dumping 20%, 25%, 30%, because that leveraging that they're all in together, and it's not, Hex is not playing in those reindeer games. Therefore, when all that deleveraging takes place, it's not being affected. So something, now it's still volatile. Anytime you have something that grows as quickly and as much as it does, there's profit taking and there's corrections, but it stands out. It has been standing out. So I wanted to point that out, and we'll continue to point out.
I would say from the chart, it looks like there was some stakes that matured sometime at the end of 21 at a large level.
For sure.
But you know, that is what it is, you know. But as you see, there's clearly a floor that's been established.
If you go back to where it was a year prior, it was worth less than a penny.
Right.
And whoever it was, 0.006, right? And then when someone goes to take profit, it was worth 50 cents. So congratulations.
40 cents even, or 30, 20 cents. Any of these would be fantastic.
Congratulations for all those, right? Yeah. So that's natural market psychology.
I keep you know, focusing on this 9.8%, you know, up over the last 30 days. I mean, there's not a lot of crypto projects that can say that in the last 30 days. That's extraordinary. You know,
I'm glad you mentioned that, because that's the other reason I want to bring this up. We don't know everything what's going on. I barely know anything. I just report research and try to learn and share what I learn and learn from mistakes. However, just be aware, if you're trying to diversify and you're trying to look for something that goes against the grain, you obviously don't want to put all your eggs in one basket that's going to fall with everything and rise everything. And this continues to be a blockchain, a crypto that has its own life, its own performance outside. It's not stuck and connected to this large DeFi liquidity monster.
This beast.
Yeah, whatever it is.
Yeah. Well, I think that's a great point. And we're going to definitely continue to focus on Hex. We got a video coming out in the next, few days on Hex and Pulse and beyond. So look forward to that. And we're going to continue, right?
Yeah, we're going to continue giving you the Crypto Neo news, education, opportunities. Why? Because as one thing we've learned from back after 2017 is that whether it's a bear market for a few months or a few weeks or a year or a couple years or more, this technology, this sector, this is the light bulb, electricity, this is oil and gas, this is the automobile, this is Web 3.0. It's the foundation. These blockchains, these networks are the building blocks for future communication and transferring of resources and exchanges. So you're very early. This is a great time to learn. And these are the times to find out which projects are worth anything, not when everything's green and there's money being thrown everywhere. It's to find out, well, when the chips are off the table, who's still around and who's still building.
Where's the development still happening?
Absolutely. So we will definitely be providing those updates and staying abreast of those opportunities. And if you know of something that's happening and going on, you know what to do. Drop in the comments and let us know. And if you're one of those big old whales that would love to see our channel continue to grow and exist and us take the time to do this, well, you know what to do. Find that Luna address below and drop a donation.
Maybe not Luna.
Oh yeah, no, not that one. We'll take that one off. Okay, cool.
But if you made a bunch of money on Luna, by all means, spread the love, right?
Sure, sure.
Well, until next time.
Have a beautiful day. Namaste, y'all.